Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month nickel, zinc and tin.
Hello and welcome. Before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, LME 3-month nickel. Okay, so just to remind you once more, I have said repeatedly in this commentary for months and months that the most significant feature of this market has been the key lows of 2021 at 15,665, which led to lows of late November 2023 plus the lows in 24, most recently in late October, November and early December, and I suppose also the congestion in January, February, late April, May and early June this year. I'd also add that for many months I'd also highlighted how the 15,840 level, along with this low for 2021 at 15,665, was and is still key. So 15,665, though the market today is closer than last week, has, moving away from it, the slowly dipping mauve medium moving average, currently 15,525, and also the nearby flatlining green short medium moving average, currently 15,310. Further up and moving higher, away from the market, we have the dark blue July 24 to November 25 head and shoulders neckline, currently at 16,085, and in between the declining long moving average, currently 15,705. Altogether, some of these are some pretty heavy duty resistances which have previously capped the market. Meanwhile, prices in the near term have not only punched up through the green short medium moving average yesterday, but also the 50% Fibonacci line for 2025 at 15,325, which had originally acted as a base of action. We are seemingly starting to stabilize over these both, but though the market punched up through the mauve medium moving average, it has not as yet closed over it. And this, along with the nearby bright red upper tine, currently at 15,600, it's very close to that level I was talking about earlier, and that's of the early October 2024 to mid-March 2025 bearish shift pitchfork, well, they've seemingly provided enough resistance for now. It should be noted, as I've said last week, over all of the recent actions, we have the bright red early October 24 to mid-March 25 bearish shift pitchfork in charge. The question is whether the bright red upper tine can withstand the pressure building up to challenge it. If it does, then as I said last week, and I quote, the hesitation we saw in April and May ahead of the 16,000 to 16,780 area was enough that we can look at the mid-April to end of May action as a double top pattern, Eve and Eve type. 7 weeks ago, so that's now 8 weeks ago, we reached and breached the neckline for this pattern, down in the 15,200 level, just below the 50% Fibonacci line for 2025 at 15,325, and that's the end of the quote. Now, I further added 8 weeks ago, and I quote, you would need confirmed consecutive closes below this level to contemplate the downside, but whilst I cannot set target below, I can indicate potentials. Thus, a primary potential after a confirmed break low will be down in the 14,835 zone, so not too far, whilst the secondary potential will be down in the 14,380 zone. I say again, these are just potentials, but ones that might come about as targets if a move lower happens before I get a chance to comment next time. End of quote. 5 weeks ago, we tested lower to new lows not seen since mid-April, leading me to clarify the status of these two potentials. Thus, we have a primary target reached 3 weeks ago down at 14,835, and the secondary hardest reach target X1 down at 14,380. The secondary target X1 is now under threat as a target. A concerted move over and subsequent stabilization over the combination of the bright red upper tine and the gold long moving average would lead me to reassess the viability of this secondary target X1. LME 3-month zinc. Much like LME aluminium, there had been here a number of patterns affecting the market in recent times, all happening at the same time. The first is a thoroughly broken, but even now, still refusing to die, dark blue, May-August 2023 bullish shift pitchfork. that subsequently acted as an August 23 to April 24 bull channel, especially the upper and middle tines. This one still will not die. Even when I thought 15 weeks ago that it had finally expired, it still nevertheless is influencing and impacting now the market, especially the dark blue lower tine, currently at 26.80, and this week the dark blue middle tine, currently at 28.45. Next we have the bright green mid-December 24 to mid-March this year bearish shift pitch hawk. Prices on Friday broke clear up and out of this pattern, have seemingly stabilized well over it this week. These actions put this pattern on notice of now being retired. Meanwhile, looking topside, well, as I said 7 weeks ago, and I quote, I keep an eye on the declining green short medium moving average, currently at 27.02, and the mauve medium moving average, currently 27.34. Plus, I suspect maybe a key level, and that's the 50% Fibonacci line for the whole March to April move at 27.55. This is not the whole of the 2025 action, just the whole of the major move in the last few months, end of quote. Now these three acted as a base for the latest sweep higher, such that we are yesterday and today challenging the slowly declining gold long moving average, on top currently at 28.52. Beyond this, we next have congestion between 29.05 to 29.17, not a very big one, but there we go, made up from the July and August 2021 lows respectively, and then congestion at 29.58, that is just short of the significant 50% Fibonacci line of the 2008, that old, yes, 2008 to 2022 move at 29.67. I said last week, and I quote, so we are finally left with a choice on the interpretation of what the whole late March to date drop and hesitation might be. So is it a basing action for a possible future attempt higher, back up to the broken dark blue upper tine, and that's currently at 30.09, just remember that level. Or is it a hesitation, a somewhat large hesitation, potential down to the 23.10 zone? Right now it is not easy to say which, but I would keep an eye on the following: the bright green bearish shift pitch hawk, the short medium moving average and the medium moving averages, and the 50% Fibonacci line at 27.55. They all have given a clue to a somewhat bearish future, but this has been countered by the big old dark blue lower tone, which is still here, end of quote. Yes, the big old broken dark blue lower tone lit the fuse for this latest attempt higher. The only question now is whether the dark blue middle tine of the same move will halt the rise, or will it add its weight to yet a further move higher. LME 3-month tin. Okay, so the big picture here has been centered for a while on the dark blue late November 24 to mid-April 25 bullish shift pitch hawk. We're in between the lower tine below, currently at 30.240, and the middle tine above, currently at 35.025. Now, as I've said here previously, much like some of the other metals I've discussed here today, there are a number of patterns affecting the market all at the same time. From the bottom, we have the low of April and 2025 so far down at 28.925, just below the July 2011 high at 29.005. On the way down there, prices pass through the now flatlining long moving average, which is now again support, and that's currently at 31.660. And the closer support of the mauve medium moving average, currently at 32.915. Then there is the purple neckline extension, currently at 32.685 of the April 24 head and shoulders continuation pattern. This had been a resistance in the recent past, but I am beginning to suspect that it might have been more of an attractor than anything else. Close in with the market, we have the small but significant congestion of the previous all-time high, back in April 2011 at 33.605. Please remember that level. And the 50% Fibonacci line for the whole of 2025 so far at 33.660, so they're not very far apart. These two are interfering with play right now. Above is the next 50% Fibonacci line, this time for the March to October 2022 move at 34.175. We then come to a close-in trio of resistances that are now starting to spread apart. They are the dark blue middle tine, currently at 35.025, the bright red neckline extension, currently at 35.075, and that's of the August and November 2024 head and shoulders top, And the interesting, though I'm not sure how good it would be, bright green lower time, currently at 35,150 of the broken November 23 to November 24 bullish shift pitchfork. As I've said, it is broken back in April, but it did see some good action since as a dynamic resistance, so it's best to include it. Now, I had recently put forward the idea that the whole early April to date action could possibly be a really big bearish halfway hesitation. However, as I mentioned last week, I was really bothered by how the neckline extension, currently at 35.95 of the October 23 to January 24 reverse head and shoulders pattern bottom, could really hold up prices, and I am even more concerned today. Thus, I think I will shelve the idea of a big bearish halfway hesitation. So, just now, start watching towards the upside, just in case.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.